they're not in the chip trade right now. The gold and silver market is so small that it doesn't take much to really move it. We don't have enough copper. We don't have enough critical minerals. China's not exporting them to us. We don't have enough electricians and all the skilled labor to build all this stuff. If we build all the data centers we've been talking about building, it'll be half the US power grid by 2030. It's already 2026. It's almost 2027.
Kevin Steuer returns. He's a managing partner of Stock T8. On the agenda today, his outlook on risk assets that are rebounding dramatically. Gold, stocks, S&P and NASDAQ both reaching new all-time highs. Gold has rebounded dramatically since the beginning of August, rising from $4,000 to $4,400. That's a 10% move in just a span of days. This is very abnormal. Why are markets turning around so aggressively all of a sudden, and where is it headed? Kevin's going to give us the answer. This video is sponsored by Kalshi. It's the largest prediction market in the United States. Unlike a sportsbook, you're trading peer-to-peer on real-world events, from economic data to political outcomes, and the price moves based on public opinion, not a house. Go to the link in the description down below, or scan the code here, QR code here, and use my code LIN, L-I-N. If you use my code, new users can get up to $500 if you trade $25. This is CFTC approved and available in all 50 states, including California and Texas. More on that later. Right now, there's a trade for how high gold will go by the end of the year. This is something that I cover with Kevin today, and he's going to reveal his target for gold for the end of the year. Traders on Kalshi are predicting that there is a 55% chance that it's going to go above $4,400 and a 75% chance that it's going to go above $4,600. Right now, it's sitting right above $4,400 as we record on August 7th. And so traders are bullish on gold. If you believe, if you're in the camp that it's going to go above $4,600, and if you place a $50 trade, that could yield a payoff of $75 or more if you turn out to be correct. So stay tuned for Kevin's answer. Welcome back to the show, Kevin. Good to see you.
Yeah, thanks so much for having me.
Let's just start with that. Why did stocks all of a sudden rebound beginning of August? And it wasn't just like, oh, it went up a couple percent and stayed there. The S&P is up about 5.5% in a matter of days, which is significant. Gold is up from 4,000 to 44,400 in a matter of 1 week, which is up 10%. Just today, it's up 2%. And it just looks like everything is rebounding. Not everything, but risk-on assets are rebounding aggressively. What changed?
I don't know if I really know the answer for that, to be honest. And thankfully, our algorithm kind of caught that swing and caught some of those bottoms. So I've been more aggressive buying here, and my own personal book has done pretty well here the past couple of weeks. But I think that pivot after the Fed meeting really caught a lot of people by surprise, because I don't think Warsh's tone was exactly what people thought it was. And now I think it was either late last night or this morning, some of the major banks are expecting 3 rate hikes this year, where we're expecting rate cuts 2 months ago. And that's usually not good for the economy. But I mean, the dollar starting to sell off, I think, has helped gold. I think there's just been a lot of different, I don't think it's one specific thing. I think it's just been a lot of different smaller things that have kind of put some people's mind at ease to be able to go back in. And I mean, hedge funds, I saw, have been buying tech at the quickest pace since I think like the COVID rally. Like, it's been insane to see the volume coming back into some of these stocks.
Are you a buyer at these levels right now with momentum picking up of stocks in particular?
Certain stocks and sectors I have been, like gold and silver, the miners, started nibbling on it last week. I mean, I think going into today, gold's made, I think it's 8 consecutive days of making a higher low. So that's always a bullish sign on the chart. It's starting to rip through some major support levels. So that's looked good. Some of the semis haven't looked as good. So I've been long tech, but more on the software side. And I know that sometimes that's hard to distinguish, but I've been long some of the Mag 7 stocks. Some of them still don't look good. Netflix is looking like it's trying to form a bottom, but I think there's definitely some opportunities here.
Okay, things you like, things you don't like. Let's start there, and then we can talk more about different asset classes and break them down.
Yeah, I mean, I'm long IGV, not to come on here and pump my own book or, tell people to buy IGV, but I've been long that. That's been a great trade for me. It's interesting ticker symbol, but CRAK, CRAK, which is the oil refiners. I didn't know anything about it, but my algo picked that up, and I don't know, depending on what happens with Iran this weekend, no C on the second. Yeah, CRAK. So we caught that breakout at the end of June. And that's been a great trade for us. And our algorithm is trying to figure out, we've been in and out of this quite a bit this year. And that's been just an interesting way to play the oil volatility trade because, you see that oil volatility, and not saying the refineries don't care, but their profit margins have been pretty healthy. And with whatever.
It's really interesting how oil has basically moved up in a straight line in March, and the refiners didn't really reflect that like straight line move upwards. The momentum that we saw that this chart showed that started in the beginning of the year in January just kind of continued gradually. So it's less volatile than oil. That's really interesting.
So it's been a great trade for us. And to be honest, I prefer those kind of trades more than the hockey stick trades. Like now in the past month, like that June to July, with that hockey stick to the top right, that kind of worried me a little bit. And now I don't know what's going to go on with Iran. I'm not a geopolitical expert, and it's starting to consolidate, but it's starting to lose some signal strength in our algorithm. So I might be out of this next week, but this has been a great trade for us.
Most people aren't geopolitical analysts, and even those who are, they don't often get everything right. But if you are not a geopolitical analyst, and like most people, you don't know what's going to happen to Iran, and frankly, I don't even think the Trump administration knows exactly what's going to happen with Iran, how would you even trade the oil markets? Is it a prudent investment or trading decision to get into a market that is solely dependent on the outcome of an event that you don't know how is going to play out?
No. And this is why I prefer this ETF. Like if you compare this one versus USO or XLE, like this one's been easier to trade, and thankfully our algorithm picked it up. And like I said, I didn't know anything about it until earlier this year, but it just, I like things that are I'm not a day trader, so I like to kind of swing trade and find stuff that is, making a series of higher lows and not just gapping up and going, parabolic. So I think oil's been really tough to trade here. And I think that's made it really hard in general to trade because of the pressure it's put on the 10-year and inflation. And you have all these different people on CNBC saying, oil's going to $200 a barrel. We're going to have a major recession. Like, I think the oil volatility in general, I think for a long time weighed on the market. And that was kind of my main concern once we started this conflict going into Iran. I was worried it was going to be more of a long dragged out, like not a quick in and out or a quick bombing like it was that last summer we bombed their nuclear mountain facility. And the market doesn't like uncertainty. I think there's still a lot of uncertainty with oil here. So I think some of the hedge funds are starting to get past it, and I think that's what's caused some of this tech rally, but it's been a very tough trade, that's for sure.
Okay, talk about tech rally. Let's go back to IGV. You said you like IGV. The software index has been hammered this year, partly due to the fact that there's some scare that AI is going to make a lot of software companies obsolete. But you're a buyer here. Why?
Well, I've been long it for, I think, since our last podcast. Our algorithm picked it up. It was bullish trend. It had some major support levels. So we see has medium support at 98.54, has more medium support at 95.53, and not a ton of overhead resistance. So I'd like to see it not double top here at that like 108 level. But whether it's just a mean reversion trade or just people rotating out of semis who still like tech into IGV, Microsoft has done really well. There's certain, tech companies within that ETF that have done really well, but it just, in our algorithm, has a stronger signal score than semis do right now.
Could you please pull up a dashboard that you follow or a chart that you could show us that may illustrate basically how your algorithm scans for strength and weakness in the market and momentum? So if you take the S&P or NASDAQ, for example, and you're looking at signals for strength, what would you look at? Walk us through here. Walk us through your process.
I'll share my screen. Can you see my screen here?
Yeah, got it.
So this is our main landing page, and I really like this as kind of a high-level overview because it gives you a trend score of some of the major stocks and the major indexes. So last week, on Monday, the Dow Jones had the strongest signal score coming into the week, and that ripped on Monday. And, QQQ wasn't as set up as nice. IWM wasn't set up as nice, but I think this gives you a high level view of kind of where the market is. And I like having the dollar down here just because I always keep that in the back of my mind. But you can click on a stock. So we click on SPY, we use a confluence system. So anything over 15 is heavy. So this has heavy support at 751.32, and it's neutral right now, but the score's been increasing, which you can see from the chart going up. So I would be a buyer. I'm in a lot of my retirement accounts. I'm still long SPY. I'm still long the general market, but we could see with setups like this is what I like to see for more of a broadening sector rally. And part of that could be, Apple's done really well lately. I know it gapped down last week, but earlier in the month, that's all people were talking about. And then, Microsoft has had incredible strength lately. So you look at that and there's no overhead resistance right now, and you still have some medium support levels. And it's just interesting because I think this is a really good way to kind of look as a dashboard and just see, high level overview. Then I kind of get more more micro from there.
Okay, so right now, if we were to look at the overall index, do you have one for the index?
Which index?
Let's do S&P 500. Let's start there.
Yep. So that's what I just showed, SPY. So that's a spider S&P 500.
Okay. So when you see a breakout like that, let's just leave that up there. We can walk through this. When you see a breakout like that above those trend lines, are those moving averages?
Yep, these are moving averages. So these are 5, 13, 20, and 50. And we like
something breaks out above all those moving averages this aggressively. Is that a sell signal for you?
It depends on what else is going on in the RSI and stuff. But if I'm being a little bit more conservative and tight with my stops and how I manage it, which I have been due to the Iran war, then I would try to be in before that breakout. And that's where I think our algorithm does a good job kind of catching those momentum swings. And you try to ride up that upside. And then I don't know if I'd sell all of it here, but depending on my positioning, I might take a little bit off the table to lock in a profit. What
does the RSI say right now?
So RSI is at 63. So it's technically not overbought right now.
70 is overbought, right?
Yep, 70 is overbought.
Okay. So it's kind of hovering between 60 and 70, trending above moving averages. So technically not overbought, but it's looking pretty aggressive. What do you do in that situation?
Depends on the general market dynamics. With the VIX being low right now, I wouldn't be in a rush to sell stuff. Now, have I sold stuff this week heading into the weekend? Yes. And that's because of kind of the unknown with Iran this weekend. Like, we may bomb the heck out of Iran Saturday, tonight, Sunday, who knows? And the market might open down big time on Monday, or there could be nothing.
It always seems like these bombing operations happen on a weekend.
Yes.
Right before the market opens.
That's why I try to take some of my risk off the table. Like, there are certain positions that have good kind of asymmetric setups to the upside with, like, this has heavy support underneath it. So if this went down to, the low 750 range, 750, 751, and that support held, then I would probably buy that dip. And if the general market conditions are still bullish.
This is just purely speculation, but do you think Trump and his fund manager buddies call each other up and say, hey, look, if you're going to bomb Iran, do it on a Saturday or a Sunday after market closes? Let's just let things digest here.
I think there could be some merit to that, unfortunately. And when that narrative gets out there and then Iran releases news about how they have proof of market manipulation, and then True Social comes out with, we're going to charge $100,000 a month for you to have. I'm a registered independent. I'm pretty apolitical, but I'm just saying the optics around it really don't look good.
Yeah. Okay. Speaking of oil, right now the oil price has rebounded. Have we entered into an era where the stock market doesn't really care about what the oil market is doing? There was a time when higher oil meant stocks would fall. To some extent, that was true earlier in the year, right? Huge decline in March. However, earnings have been good. Corporate earnings, people tell me, are what's driving the stock market higher. And even if oil goes to above 80, it's at 78 right now on the WTI, above 80, 85, 90. Could you see a scenario where if oil retraces its previous June highs or July highs, the stock market just doesn't care?
I think the market would care. I mean, I think I said on your show a couple weeks ago, I think the high's in for oil unless we get a boots on the ground situation in Iran. And I think you have to think in, I like Annie Duke's book about thinking in bets. So I think when you invest in the market, you're placing bets. So I think you need to think in probability. So I like to have some exposure to oil in case that does happen. And I hope it doesn't, because I think it would be, could be a lot of casualties and it wouldn't be good for a lot of people. But, I think you need to have some exposure to oil. And I like to kind of build my book out that it worries me when people get super concentrated. Like I had some friends who were all in AI stocks a month ago and their book just got decimated. And then human nature takes over and they sold basically near the bottoms, if this is a short-term bottom for AI. And I like to kind of build my portfolio around that. I have exposure to tech. I have exposure to energy. Earlier this month and earlier this year, when commodities were doing well, I had exposure to some of the agricultural commodities. I have exposure to gold and silver. So I like to build my book that, not everything goes up on the same day, and that's okay, because I don't want everything to go down on this when it's the flip side too, if that makes sense.
Okay. Let's talk about gold. Now, could you flip over to a chart of gold? I want to get your analysis first, and then I'll show you what prediction markets are thinking about gold.
So this is GDX. This is picked up. So this was bearish around here, and it was bearish basically from here on down. It went up to neutral, and you can see this chart, like it just hasn't broken out yet. And now we're starting to get that breakout. So that's why this is bullish short term. And this has major support here at 75.32. And if you look at these resistance levels, they're all small. So this is what I would call a textbook asymmetric setup, that you have a lot of support underneath. You have room to the upside. I like gold here. Some of the major miners like Agnico Eagle and Newmont were some of the weakest signals in our whole database for a couple months earlier, like the spring, like after May in this summer. And I think gold has some room to run here. I think the dollar selling off has really helped. I'm curious to see if this is just a mean reversion trade because it's so oversold, over the last 6 months, or if this is the start of a new up leg.
Yeah, what does that look like to you? In the past, gold's move in either direction typically has been gradual. Even the peak that we saw in late January was a culmination of 2.5 years of rallying. And very rarely does it move up and down by the order of 5% or more in a matter of 2 days.
I think part of that too is people trying to find somewhere to go, to your point. If they're trying to get out of oil, if they're not in the semi trade right now, or if they're not in the chip trade right now. And I think the gold and silver market is so small that it doesn't take much to really move it. And that's great when everything's going up, but that's also what causes people to get really hurt on the downside. Like silver, that's where the term bag holders come from, is people who got stuck bag holding silver back in the day because it was so volatile.
Sentiment on gold has just improved in the last 2 days, coincidentally with the price increase that you just talked about. This is from Kalshi. It's a prediction market in the U.S. Gold price at the end of the year. The odds of gold reaching above $4,300 or more by the end of the year have climbed dramatically in just the last couple of days. Now, there is a higher than 53% chance that it'll go above 4,300, and the consensus forecast seems to be 4.6 by the end of the year, 4.64. Actually, if you go down, okay, there we go. 75% of traders on this particular market think gold's going to 4,600 or more. So that's not a huge increase from here, but it does come to show that the odds of a much higher gold price than previously is now higher. A $4,600 increase, gold price targeted by the end of the year represents a less than 10% increase from here. But your thoughts? Is this points? Yeah, go ahead.
45.72 is, I would say, for gold is the next major resistance level, because that's, if you pull up the chart and look, there's a couple spots where that was both support and resistance on that last run. So I think if we get above that, then I think there's a pretty good chance we'd finish the year above that level. So that's pretty close to 4,600. But I don't know. I think it's still a little early to tell if we're going to be making new all-time highs. Like I'd still like to see, I don't want to see that hockey stick up to the right move, but I'd still like to see some consistent volume because I worry, like I said, this space is so small that people get, it's easy to get stuck on the wrong side of things because when it moves quickly. But I do like gold and silver here. I like gold more than silver here. I mean, I was on your podcast, I think a couple weeks ago, a month ago, and we said we really liked copper, and copper has done really well. So I think copper and gold continuing to do well will probably pull silver up too. But I think looking at the chart, I think silver still has some more work to do before it can like get a real nice breakout back up to, I think it was like 80 something earlier this year, 100 earlier this year.
All right. Well, let's talk about some tech companies. So earlier this week, we had a number of hotly anticipated earnings releases. SpaceX beat revenues expectations. Sorry, not earnings. They beat revenues expectations, but the stock went down because they spent more on CapEx than expected. We talked about SpaceX last time on the show. You called it a dump for retail investors holding the bag. I think that turned out to be accurate, what you predicted. And here we have another trade. Will SpaceX land anything successfully on Mars before 2030? Not a lot of confidence before 2030. But I don't even know if this is relevant anymore because SpaceX is being valued more and more like a telecom business, given that the Starlink service is accounting for most of its revenue. Anyway, what's your read on SpaceX? And given that it's declined so far from its IPO price, would you be a buyer at this level?
Not here. And part of it is because I don't know a ton about it, but how they structured the shares and how the shares are being released to the market here, I think there still could be some volatility, both to the short and medium term. And I do agree with your point. I think the Mars thing is kind of the flashy part of the business, but I think the part that's going to generate revenue for them now and probably for significant time moving forward will be that telecoms part of the business. So I'm really curious to see, I wouldn't be one to bet against Elon. Like he's been pretty successful with Tesla and a lot of the different other companies he started. So I think they'll figure it out. I'll probably be a buyer of it at some point longer term and just put it in my retirement portfolio and not touch it. But I'd like to see it, it's on our chart, it's neutral, but it still had a, declining signal strength. So I don't know if the full bottom is in for this cycle yet.
What's your read on the bond market? Huge spike in the long end of the curve in the last couple of weeks. That's tapered down somewhat in the last week or so. And I think partly that may have partly been the reason for why gold spiked up is because the 10-year yield and 30-year yield trended down a little bit since the beginning of August. Regardless, it's still much higher than it was a couple of months ago. So do you think the bond market will continue to see trouble ahead if yields go up even more?
I think it could. I mean, I think if you follow the MOVE index, I think that's been really interesting to watch just because, I'm looking at my other screen here. It's at 76 right now, but you've had moves not that long ago where it was over 100. So I just think it's just been really interesting to see where I know Besson is like really, really focused on the 10-year, and I know he's been really focused on the yen and that whole carry trade recently. But the MOVE index in our system has upside to 83, which still isn't an alarming level, but it's kind of oscillated between. I wouldn't say where I get alarmed, but I watch that along with the VIX and the 10-year. Like those are the three big things I watch along with the dollar to kind of get a macro view of what's going on, just not only the US market, but kind of around the world. And I like gold here. So I'm thinking bond market might be okay in the short term. And there's so many unknowns here between now and the end of the year. I feel like this has been a really tough time to trade just because of not only what's going on with Iran, but Besant, you got a new Fed chair coming in, not Besant, Warsh, new Fed chair coming in, and he was, projected to be, and he talked like he was going to be this inflation. He was going to kill it. He was going to inflation as a choice. Like he had some very strong rhetoric on it. And they didn't cut rates, and now they're probably going to raise rates. And depending on where inflation goes, I think that could be interesting, because looking at our system, like, it's not always super accurate the longer you go out, but we see some volatility coming the start of next year if things kind of stay the same. And again, there's so much uncertainty. I'm not worried about that right now, but I will be worried about if that setup stays the same and you have the Fed raise 3 times by the end of this year. So that's kind of where my focus is, medium to longer term, is not only what the bond market's going to do, but is, the Fed saying they're going to change their methodology, which is great because they were so far behind the curve the last time. And if I heard Powell do one more press conference where he said inflation was transitory during COVID, I was going to lose my mind. Like, I bonds were at 9%, which is crazy. But I worry, I don't know if Warsh exactly knows what he got himself into. And I think Trump and how we started this Iran war didn't do Warsh any favors on the inflation front. And I don't know how we unwind our involvement in Iran and bring inflation down to help the Fed. And I think that part is what scared some of the CapEx behind the AI, because the CapEx costs and the cost to borrow are just getting so outrageous now. So I think there's going to be pressure on Warsh to keep rates lower. But going into political midterms here, I don't know. Like, that's the part where there's just so many unknowns that I'm just trying to trade the right now. And, thankfully I've been outperforming the market. I've had a really good year, but it hasn't been easy. Like, this has been one of the harder trading years.
It's difficult to outperform the market overall. And I like to get you to talk to us about how you did that. The market is up. The S&P 500 is up 60% since the May low of 2025. So in the last 15 months since May, middle of May, it's up 60%. You'd have to be up at least 60% to beat that record. How did you do that?
Well, early in the year before we invaded Iran, I was up, I think it was like 33 or 34%. So I had a really good start to the year, and that definitely helped. And I was able to stay out of some of those sectors that got really hurt during the first version of this Iran war ramp up. So I think just managing your risk, and that's where I really like our algorithm, is I find the sectors that have a lot of momentum behind them or look like they're going to break out and have some support below them. And I try to kind of trade in and out between those markets. Like, I got out of gold before gold had that big sell off. Now I'm getting back into gold as I'm hoping it's going to continue going up. Same thing with Bitcoin. Like, we haven't been long Bitcoin in a while. Like, ETH did well a couple weeks ago. We swung trade that, made a nice little profit, but it didn't have any staying power. Now that may change a week, a month. I don't know when, and I know it's hard to time the market, but for me, it's trying to avoid those bigger drawdowns, because if you can consistently hit singles and doubles, and if you manage your risk and you use stops, like, you can leave some of that capital on the table. So you might hit a home run. You know what I mean? Like, Dell for me was a home run. Pelletier has been a home run. Like, those have been some great gains over the last couple of years. But on the short side, or on the short term, if you avoid some of these drawdowns at some of these stocks where they just get crushed, like, we weren't in software when it was down, whatever crazy percentage it was down earlier this year. Now we're long it, and it just making a couple of those key moves throughout the year, I think, really helps, because was it Pareto's principle, like 20% of your efforts or 80% of your outcomes? So that's kind of how I look at my trades. Like, I'll put a trade on. We talked about the deflation trade last time I was on your show. I got into that a couple weeks before your show. I was up not a huge amount, but I got stopped out for, I think I made 6-7% on it, which isn't terrible, but I didn't take a loss on it. And then I was able to free up that capital, and I still had, people don't realize when you get stuck bag holding stuff, it's not only the paper loss, it's the opportunity cost, right? So I like to keep capital available for when I see those asymmetric bets, I can try to maximize the return on them. And I may not get all of them. Like, I missed Palantir the other day. That had a good ranking in our system, but I don't love to trade on earnings. And I thought about it, and I didn't pull the trigger at the close, and then it ripped after. And it's like, yeah, I missed it. But as long as I keep enough dry capital and I manage my risk well, I'll always be able to have that next play. And that's what I think is important, is just maintaining that discipline.
How does a trader manage this much uncertainty? Like you mentioned, there's too many unknowns, and we don't know how the Iran war is going to unfold. We don't know where oil price is going to go. And given these unknowns, how do you navigate that? Do you stay out of the market? Do you have more cash holdings? Do you buy VIX? Or do you focus on a smaller concentration of stocks or trades that you're more of an expert on, rather than exposing yourself to geopolitical risks that you don't know how to forecast?
Yep. Honestly, a little bit of all that. Like, you hit the nail on the head with a lot of that stuff. If oil's looking volatile, I won't touch it. If gold is in a downtrend, I don't like to catch a falling knife. So I haven't touched that for a couple months now. Like, I always watch it. But for me, when stuff gets really volatile, I like ETFs because there's a lot of liquidity and it spreads out the risk. So earlier last week, I bought Hack, which is a cybersecurity ETF, and that did really well. But that had some holdings in it that, like, Datadog's a part of that. And we got out of that before the Datadog earnings. And even though they had a double beat, it got crushed after because people didn't like the forward guidance. So I think being able to trade ETFs and knowing which sectors to go during this volatility it's just a good skill to build. And that's something you gotta learn the hard way. Like, I've been doing this for a long time. So you learn. I keep a trading journal that I keep a lot of notes in, and you got to do your homework. And it's not easy, but trading within your style and finding ETFs, like, that's why I like our overview, is I get a good macro overview on the main page when I log in every day. And I look for those sectors that have a good setup. And then if I really like that sector, then I look at the top 10 holdings of that ETF. Like, XLY has a ton of Tesla in it. So if Tesla stock's doing well, XLY ETF is doing well. And then the reverse is true. If Tesla's doing bad, XLY ETF is going to do bad. So you look for those ETFs that have that setup. And then if you really want to press your bet, you can get more to the micro level and pick out some individual names.
So deflation, you called for deflation last time. That assumption turned out to be incorrect. What happened there, and how are you revising that outlook?
Yeah. Well, at the time, the agricultural commodities were breaking down, moved to the downside, and they still are, which is interesting because you think that would continue to drag it down. And oil was starting to go down, and it still has a little bit. I'm looking at my other screen here. So I thought deflation was the play, and it turned out it wasn't. And thankfully, I set my stop in the right place, and I made a small profit. And I tell people all the time in trading, they're like, oh, what do you think of this? Were you right on this? And it's like, I'm never going to be right all the time. Good traders are right 50% of the time. So I don't always want to be right. I want to make money. So if you have a thesis, it's fine to play that out, but you got to be really disciplined about where your entry is, so you can set up that asymmetric risk and then set your stop in a place where you're hopefully still making a profit if you're right. And who knows what goes on with Iran? I thought oil, with how the deflation trade has kind of gone the past couple of weeks, I thought oil would be lower, but honestly, it's a weird trade for me right now because I thought deflation was the play. I was wrong. I got out of that, but the commodities have gone down, which would make sense with that, but I'm still long some of the energy sector ETFs. So do you kind of get what I'm saying? Like, it's really a mixed bag right now on the energy front. And a lot of that energy is the input for how they measure inflation or deflation. So it's a tough trade. And that's where, you can't be black or white with trading. Sometimes there's more shades of gray than there are black and white. And that's where it's weird that you got to be open-minded to look for the opportunities.
When you get a macro assumption wrong, or let's say you flip your outlook on a macro assumption like deflation, so once you were assuming deflation, now that's no longer the case. Maybe you've changed your stance on that. Do you change all the other trades as well? Because that's such a baseline assumption that if you're assuming a deflation, you're probably deflationary trades. If you're assuming inflation, you're looking for inflation hedges, right?
Yep. And that's why I've changed some of my tech holdings. That's why I've changed my outlook on gold and silver. Like copper, I've been pretty consistently long that lately. But you're right. That is part of the basic framework of, you got to know those numbers, and you got to know what the dollar's doing. You got to know what the bond market's doing, because all of that kind of plays into you have different, I don't know how to exactly phrase it, but you have different phases of the market. And I find that, if inflation is going up and revenue's going up, that's usually where you want to be long growth or momentum or tech. But if you have kind of a stagflation environment, that's sometimes when energy does better. But again, then you have a stagflation environment with a war in the Middle East. So that you can't always just be like, oh, this is 100% what it is. Like, it's always a mix of a couple different areas. And that's where that's where I try to really diversify my portfolio, because I may not know if I'm right for a day or two. And usually when I'm start to get wrong that's usually when I start to lose money. And that's when I need to make those pivots.
Besides the inflation deflation assumption, any other trades this year that surprised you?
Great question.
Something you expected to play out, either you were involved or not, that went the other way.
So I think the DRAM ETF, that's the memory ETF, how quickly that went up surprised me. And I didn't chase that. And I thought that bubble would pop, but I didn't think it would be as quick as it was. Like, I thought it'd have a little more staying power. But I mean, look at that thing.
Mm-hmm.
So I didn't get all that on the way up. I just stayed out of it, and I didn't short it on the way down. But I think that, with how badly that impacted South Korea's general market, I think has been really interesting to see. And I think that's the danger of having such concentrated positions. Like, I think so much of the earnings in that South Korean market were the S&K, Hynix, however you say that, and then Samsung. Yeah. And when those were doing great, it was great. But when the wheels fell off, like, I remember waking up one morning and I remember reading about, like, it's like over 1 million people got margin called in the South Korean market over a weekend.
2 million.
And that's the kind of stuff that worries me, because I worry that a lot of retail traders don't have a process, and they're just, whatever they think they're doing, it works when everything's great. But it's kind of like you walk into a room and the light's either on or it's off. And these people don't know how to get out before the light goes off.
I don't know how, like, the average size of these accounts, but from what I understand, talking to my Korean friends, the average salary in Korea is lower than the US. So a couple $1,000s is more significant for Koreans than the average American. So again, it depends on the account size, but even a few $1,000s busted is impactful. On this, I keep wondering to myself, people are talking about the AI bubble bursting. Ray Dalio was just on CNBC or Bloomberg. Look at this. Ray Dalio, AI bubble, Bloomberg. Right? He look at this headline. AI bubble will burst eventually. This is Bridgewater's Ray Dalio 2 months ago. Is this it? Is this like the extent of the bust that we're talking about here? Because something's down 40% in a matter of 4 weeks. That's significant. SK Hynix down like 40-something% all throughout July. I wonder if this is the burst, and it doesn't really need to get worse than that. Like, it doesn't have to. We don't need to see Apple and Nvidia down 40%. It's just these chip stocks.
I don't know. I mean, I hope so, because I'd like them to go up, because when those go up, it's easy to trade and you can make a lot of money doing those. But what worries me is, you talk about, Anthropic and what's the other one with Sam Altman? Sorry, I'm drawing a blank. OpenAI. They're trying to IPO this fall. Yeah. And it was kind of like a race to see who could get there first. And then the SpaceX IPO flopped. And now you're starting to see OpenAI, especially, I see a lot more rumors and headlines about the government taking a stake in them and Trump taking a percentage and what that is. And to me, that's kind of like a smoke alarm going off a little bit, because if your company's doing so great, why are you trying to give away part of it? And I think there's always going to be winners and losers in every sector, but I worry, again, that area is very concentrated too. Like, you could have Dell that does really well, but say OpenAI flops when they IPO, and I have no clue what their structure will look like or how they'll do it. But I do worry the valuations on that side of it, but also I worry about the physical side to catch up with this demand. Like I've seen stuff that if we build all the data centers we've been talking about building, it'll be half the US power grid by 2030. It's already 2026. It's almost 2027. So where is that power going to come from? We don't have enough copper. We don't have enough critical minerals. China's not exporting them to us. We don't have enough electricians and all the skilled labor to build all this stuff. I have a friend who's an electrician. He's making $250,000 a year to build data centers. Like he's making more money than doctors. And that's great for him. And he busts his butt. So I'm not saying he doesn't deserve it. But I think, you run into a law of diminishing returns. I feel like the cost and the CapEx to keep building these and the timeline to do it, I just don't know if we can pull it off. And especially as quick as China, like we saw headlines this morning that China's AI is the same level for accuracy and it's 50% cheaper. So I don't know if we're going to win the AI race. I feel like the AI race is kind of like the space race of our parents' generation. So I'm curious to see, and I'm not an expert on this, but I just feel like our grid isn't built to handle what this setup in this future that is coming. And China has built all these nuclear plants, so their baseload energy is set up to handle this. I know their population's a lot bigger and a lot more dense in certain areas, but painting with broad brushstrokes here, it seems like they're kind of set up better in the short term than we are. And that kind of worries me because what is the government going to do if all these companies, you saw the Palantir CEO talk about all these companies are charging these ridiculous rates for tokenization and how the cost of doing business and they're rating their client's business. What is the US government going to do if some of these companies say, hey, I'm going to go use China's AI, which is 50% less and just as good as yours? What does Trump do there?
That's an excellent question. You'll have to pay $100,000 to his Truth Social account to find out what he does next before everybody else. Let's end on that note. Great talk. Kevin, where do we follow you?
Yeah, just check us out, stockta.com. You can sign up, create a free account. We're on YouTube, but give us a try. Okay.
Stockta.com. Put it down the link in the description down below. Thanks, Kevin. We'll speak again soon.
Sounds good. Thank you so much.
And thanks for watching. Please do like and subscribe and follow Kevin in the links down below. And use my code LIN, L-I-N, when you sign up to Kalshi. Remember, new users who use my code can get up to $500 if you trade $25. It's a special promo. Link down below or scan the QR code here.